Fog Scent, new fashion wear for men.
Good afternoon, you're watching Bloomberg Quint, the top headlines. Wall Street tumbled back into sell-off mode with the Dow plunging more than 1,000 points. Most Asian markets trade with cuts of 2% in trade. And Indian markets mirror global equities. Both benchmark indices trade with deep cuts. India VIX surges. Malvinder and Shivinder Singh are accused of siphoning off at least 550 crores from Fortis Healthcare without approval of the board. JSW Steel puts in a bid of 13,000 crores for Bhushan Power. Tata Steel is the only other bidder in fray. That's a Bloomberg Quint exclusive. And back home, it's earnings-heavy Friday with 6 nifty companies coming out with their quarterly numbers today. Those are your top headlines. I'm Agam Akil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, investment advisor Sharmila Joshi, Chokkalingam of Equinomics Research and Senthil Manikandan of Newberry Capital join us on the show. Thank you to all our guests for joining me on the show. Today on Hot Money, we discuss stocks like Bharat Forge, ACC, Sun TV and Raymond. Let's start with the first one, and that is Bharat Forge. Came out with an extremely strong set of numbers. The stock was buzzing in trade yesterday. Today also the counter is up close to 1%. So what did our guests make of the results and what's the way ahead for Bharat Forge? We'll ask them. Chokkalingam, we'll start with first.
Yeah.
What did you make of the numbers, the management commentary, and what should one do?
First of all the 4 stocks are very quality plays. I mean, there is a lot of safety in the long term. Maybe the short term views could be different. Coming to Bharat Forge, yes, the results are amazing, beyond expectation. But however, valuations are stretched. If you look at current year, it is around 35 PE, next year over 45 PE. So I don't think in the short term you can make money. But of course, if market recovers and rises significantly, then this can go along with the market. Okay. So therefore, I would have a neutral stand on that stock. Okay.
Any risk that Bharat Forge has to their business model or anything?
I don't see any risk now after they have successfully stabilized the business outside the country. The only risk is that in case the global economy gets into any deflationary mode, but on which I have no doubt. I mean, the entire global economic cues are turning positive, whether it is US or Europe except UK, and even China is stabilized. So I don't see any major risk. The only risk could be from its own valuation, which is highly stretched.
Okay, so valuation seems to be the concern that Chokkalingam has. Sharmila, do you agree that valuations are stretched, but would you be bullish on the counter, and what's your view on the results?
Yeah, so I think very good set of numbers, and I think the concern for this stock started with that whole American Class 8 trucks, and we saw the stock correct from there because that was always a major. That was a major market, and we saw the concern coming in there. Over the last couple of quarters, we've seen a recovery in that, and I think even just before the results, they announced a biggish order from them. So I think overall this stock has always been liked by market and market participants simply because I think the management always comes out. Very eloquently, and you like basically what the management says, and they are very clear about their strategy, etc. And now as I agree, things seem to be falling in place. Their order book going ahead is excellent. Mr. Baba Kalyani spoke of that yesterday when he announced the numbers, as well as the fact that the shipment tonnage, I think if you see quarter on quarter, over the last 3-4 quarters, that has also been steadily rising. So yes, I think for me again, the concern would be the fact that the stock has recovered from lows, but I do think that even from current price, there is a good upside to the stock.
Okay, so it's a positive view that's coming in from Sharmila. Senthil, what view do you share on Bharat Forge?
So we also neutral to positive on the stock, basically because if you see their business segments, their Indian commercial vehicle has a couple of tailwinds. The one is the ban on overloading of trucks in UP and Rajasthan, and second one could be the fleet modernization drive that is taken by the government. So these two things could be the driver in the Indian commercial vehicle space. Okay. And if you look at the US and North American revenue, actually with the recent hurricanes in the US and the tax cut, I think the Class 8 trucks will see a huge demand coming forward. Okay. So Bharat Forge draws around 13 to 15% revenue from this Class 8 truck segment. So there is a lot of tailwinds in the commercial vehicle space, and like I accept that colleagues valuations are little concerning. And what I find is there is a proxy play on the Bharat Forge. One is the Kalyani Investments. So Kalyani Investment owns around 13.5% of Bharat Forge. So that is valued at around 4,000 crores. If you look at Kalyani Investment, market cap is around 1,000 crores. So Kalyani Investment also holds 2 other stocks.
Okay.
So I think the since the valuations are a little bit concerning in Bharat Forge, one can look at Kalyani Investment because it is trading at a 80% discount to its net asset value.
Okay. So that's the view that's coming in on Bharat Forge. People like the company, all three of our guests like the company. Valuation seems to be the concern that Chokkalingam as well as Senthil did point out. Sharmila believes that there could be more potential upside. But an interesting stock, Kalyani Investment, which owns a sizable amount of stake in Bharat Forge, could be the proxy play for Bharat Forge going ahead, and that is what Senthil did speak about. The next stock that we want to speak about is ACC. A very, very strong set of numbers that ACC reported. The counter was up almost 8% yesterday. Has managed to correct a little bit in trade today, but what's the view on the counter going ahead? Numbers were very strong, 30% top line growth, profit doubled, and if you're looking at the volume growth of 27% and realizations were up 2%. Sharmila, you start first. ACC, what did you make of the numbers and your view on this space?
So very pleasantly surprised actually, given the fact that we've been hearing a lot about the pet coke ban and how it is really hitting costs, etc. But what we saw in the case of ACC, of course, is the fact that they had higher volumes and there seemed to be, the cost optimization, the measures they had taken, they sort of did well for them, and we were able to see the result of that in the kind of profitability the company was able to report. So I think that is a very good signal going ahead, because if you have managed to sort of optimize your costs in a certain way, and I do believe that volumes can only sort of improve from here, and we are also hearing that from certain geographies you will see price increases going ahead. So I think the EBITDA per ton at about 506, maybe that was a little bit on the lower side, but I think going ahead, simply because you've got more capacity now on stream, and the fact that the pet coke ban is sort of in the price, I would think that it has sort of not just helped its own stock price, but it has sort of added a sort of a boost to the entire cement sector, which was buzzing yesterday. And I think the other positive that can play out for ACC is the Ambuja Cement merger, because that will of course also bring certain synergies. So it's not a stock that I have a recommendation on, but yes, definitely I think the kind of numbers that came yesterday were absolutely a pleasant surprise.
Okay, so that's the view that's coming in on ACC from Sharmila. Senthil, what did you make of ACC's number?
So we are also neutral on the stock, basically because going forward, the growth potential of the company is very much limited. There are talks of merging ACC with Ambuja. So if these two companies merge, then the combined entity will be the second largest capacity in India. And there will be some regions in India where they will be come up with the purview of CCI. So there may be some sale of assets may be there. And the synergies are there, that is accepted. But if you compare it with Ultratech has in the next 2 years, they have plans to put up another 11 million tons. So there is growth potential in the Ultratech. So all these are in the top level players in the cement. So I think one can look at Ultratech and Shree instead of ACC or Ambuja.
Okay.
So we are neutral on the stock.
Okay, neutral on the stock. And Chokkalingam, what did you make of the numbers?
Yeah, as you said, the results are very impressive. What has attracted me is a double-digit growth in the volume.
Okay.
Because the whole industry is struggling with a poor single-digit. In fact, its growth is much better than Ultratech or Shree Cement. Valuation is stretched, but it is not like Bharat Forge on a 1 year forward earning, which is, CY 19, they follow calendar year, still around 20 times only.
Okay.
So the long-term investors can buy, the short-term investors can wait for another, anywhere from 3 to 5% correction. Then this could be a good stock to own in the cement sector.
As Senthil pointed out, the big trigger could be working out would be the merger between ACC and Ambuja, which they've already pointed out. Nothing has happened. What kind of, triggers can that merger bring to the table for ACC or Ambuja shareholders?
We have to see the legal complication, like CCI has imposed a huge penalty, but then there was some dilution to some extent. And, it is too early to talk about it. It might take some more time also. I mean, at least, more than a year or so. So I don't think that will have a serious impact in the short term.
Okay, so that's the view that's coming in on another result that came out, ACC. Pretty much a neutral to slightly bullish tone that's coming in. No one's negative on ACC at this point of time. The next stock that we want to talk about is Sun TV. The counter has rallied significantly. It did correct, but now again, from the recent lows, it's managed to move up significantly. On a 12-month basis, it's given returns of almost 30%. So are the concerns still there for Sun TV? Obviously, there are a lot of political concerns that are putting on it, or is it time to focus solely on the valuation discount that it trades to its larger peer? We'll ask again. Senthil, you go first. Sun TV, are you bullish, or what's your view on the counter?
Yes, so we are neutral to bullish on the stock. If you see Sun TV, there's a regional player, so there will be always a valuation gap between Sun and Z.
Okay.
And in the last few years, we have seen the valuation gap narrowing between Sun and Z. Sun used to trade at 50% discount to Z. Now it's around, I think, 10-15% is the valuation discount. But coming back to the business, actually, Sun TV has a lot of regional channels, but their core business channel is Sun TV Tamil. So nearly 50% of revenue comes from over there.
Okay.
And currently, if you see the market scenario in Tamil Nadu, both Z and Star are very aggressive in the Tamil Nadu market. So there is a lot of competitive pressures there emanating from there. But in spite of that, Sun being the first mover advantage, they continue to be the market leaders over there. And second one could be their IPL franchisee, which is expected to post a profit this year.
Okay.
So that is also positive on that. And on the valuation front, I'm a little bit neutral, but I think going forward with the digitization coming in the Tamil Nadu market, that could be a boost for their subscription revenue.
Okay.
So we are neutral to bullish on the stock.
Okay, but between Sun and Z, which would be a better pick in the media space?
So I would always prefer Z, being a pan-India level player. And like you mentioned, there are some concerns on the political front also. And recently the CBI mentioned like they are going to file a charge sheet in Supreme Court in the next 1 week or so. So since there is some political concerns and the valuation discount has narrowed between Sun and Z, I think I could prefer Z.
Okay. So that's the view that's coming in. Chokkalingam, what do you make of Sun TV?
No, he actually made a couple of valid points, about the competition for Sun TV, which is drawing 50% of the revenue. In fact, every day I watch more than an hour, all these three channels to relax pressure coming from the stock market. The competition from ZTV and Star Vijay is real. It's a huge for Sun TV. It used to have a monopoly status almost.
Okay.
Now it is losing that. So therefore, 25p on 1 year forward, I think is a fair price. If somebody wants to play on a long term, then yes. But otherwise, just a play on the market in the short term. That's my.
But over the years, at one point of time they had significant amount of share, and their ad revenue subscription was much higher than Z. Over the years, has that seen a narrowing down, or what's the scene like?
No, certainly it is narrowing down in my view, because if you take 3-4 years back. Z Tamil or Vijay Star Tamil, they were nowhere near Sun TV.
Okay.
Today, they are giving an extremely tough competition. And as he mentioned, there also, you have political uncertainties, including a forthcoming state election. Of course, the equation changes because it also used to get a lot of revenue from the movie business. So by any chance DMK comes back to power, and I believe that it can be a game changer. Sun TV can get a lot of revenue and profit from the movie segment.
Okay.
So then this will become extremely bullish stock.
What about your DTH businesses? Something happening on that front? Or?
I am terribly negative on DTH. In fact, I have been giving sell call on some of the DTH players ever since Jio has become very popular. The penetration of mobile has peaked out. Today, even the rack pickers have the mobile. And the only scope is the data segment for the growth. But there the realization is crashing. So which means after the entry of Jio, there will be a lot of competition for value-added data segment. So which means they will have to add a content of media, many other things to their internet platform. Which means there will be a tough competition for DTH players. So I am not bullish at all on the DTH segment.
Okay, so that's the view that's coming in. Sharmila, what do you watch to relax after the stock market? Do you watch Sun TV?
So it's interesting that, for a stock idea, we've discussed politics, we've discussed movies, we've discussed our TV watching habits, etc.
But that's primary research, what he's saying.
Absolutely,
it's actually
absolutely.
primary.
And that's one of the reasons why I don't really have a view on the stock, because I'm not a user. I don't understand too much of politics in the South, and politics does weigh heavy on this stock. We've seen it in the past that, the kind of correction that we saw in the stock. So that part seems to be sort of behind them. I think even if you do go for this CBI appeal, whatever, I don't think that it will negatively impact the stock in a hurry. And again, I think, with this digitization push, the kind of revenues that are expected to be added to Sun TV, I was reading some of the reports. Those numbers are pretty big.
Okay.
So if you go by those numbers, then there is a reason to believe that since Tamil Nadu is going for a digitization push, I think it started in the last quarter, and we will see that playing out in the coming year, and benefits because of IPL, etc., which is, we are getting into IPL season again. Okay. So good, I've added another angle, cricket angle to the stock. So I think all those things are there, but we've seen the run up in the price, and because I don't understand too much of what happens really in terms of politics in the South, I would really stay out of this one. So that is the reason why I'm really neutral on this stock.
Okay, so that's the view that's coming in on Sun TV. And the last stock that we want to talk about is Raymond. It's corrected almost 15% from the recent highs. There's no clarity, but to be fair, the counter has rallied significantly. It's up almost, it actually was up almost 100, it doubled in the past 12 months before, coming down by almost 15% in the recent past. So what's the trigger going ahead? Mr. Chokkalingam, it's the stock from the complete man. Is it a complete stock?
I would sell even at the current price. After
you would sell?
Yeah.
Okay, what makes you negative?
If you look at the P consensus, it's nearly more than 55 for the current year.
Okay.
Next year, I think it will be still stretched at around 40, 45. And if you look at the last 3 financial years, the 15, 16, 17, hardly there was any growth in the top line.
Okay.
So
what caused this rally?
This is what I have been saying, that huge rally disproportion to the fundamentals, which has taken the overall market cap to 156 trillion rupees in India, is the reason behind this recent fall. Okay. We already lost 10 trillion rupees, basically because of overvaluation of many stocks like Raymond. So I believe that whenever you have this kind of global shock, today also we lost more than 1.5 trillion rupees. So whenever there is such a global shock, I believe Indian market will lose. Particularly the overvalued mid-cap stocks will lose.
But is there any truth to this land story which the management always keeps on saying? If that happens, would your view change on
No,
Raymond?
in fact, I have been to that area and made a circle around the land also, no doubt. Yes, excellent land bank. But, it is also known to have a huge army of old employees in 40s and 50s. So we are not sure how much they will have to share with the employees, before they part with the shareholder. So therefore, I believe that it is a stretched valuation.
Okay, stretched valuation for Raymond is something that would keep Chokkalingam away from Raymond. Sharmila, what about Raymond? Do you share the same view, or would you have a bullish view on Raymond?
So very honestly, many question marks, which is why I'm also sort of neutral to bearish on the stock. One is this whole land bank, and then also, to be viewed, to view along with that the whole tussle that they had regarding the property they have in South Mumbai. Then there's this whole thing that is being played out again in the media with the son-father kind of this. So I think all those things don't really bode very well for a stock going ahead. And again, I think in terms of business strategy, I don't think really, apart from this ad campaign of Complete Man, etc. I mean, I don't really see them doing new things.
Okay.
Like for instance, if you were to look in a similar space, I think the way Arvind has approached his business of late, where they're trying to get brands and do that kind of approach. That to my mind is a better. I mean, at least they're thinking and they're trying to think ahead or whatever. I'm not really seeing that in the case of Raymond. And again, I think Q3 numbers were very good. But, as in the case of Raymond and with a lot of other companies, I think there is a whole demonetization low base that is getting reflected in a lot of quarter numbers this time round. So I'm not taking away from some of the really good numbers that we've seen, but that effect is also there. It is something that we have to acknowledge, that a lot of them are coming off from that lower base. So it might be better to actually compare it quarter on quarter or to previous before demonetization sort of quarters to see really whether the numbers are as good as optically how some of them are being made to seem. So that is why I think I would really again prefer to sort of stay out of this one.
Is there any concern with the management as such that the street would probably have, or you would have on Raymond front?
Absolutely. So I think that's what it all sort of hinges on, because that clarity hasn't really come with all these various issues. So you do hear sometimes some positive take on the land bank, etc., and the stock runs up. But that whole the way that whole issue played out with their building in South Mumbai has not really left the best of taste in to one's mind. So I would really steer clear of
Okay, so Raymond is a clear avoid by two of our guests. So Senthil, your final word on Raymond. Are you bullish or bearish?
So we are neutral to bullish on the stock.
Okay, what's your reason?
So if you look at, they are the market leaders in the men's grooming thing. So men's grooming market is more than $20 billion in India. And if you look at their store space, they have around 1,000 stores. It is around 2 million square feet of total area. And what we are seeing the changes in the last couple of years has been their asset-light strategy. If you look at even in Q3, the 70% of the new stores opened are franchisee ones. So going forward, maybe last 2 years, their free cash flow has been negative. So going for next 2 years, their free cash flow will be positive. And by following a franchisee route, they don't need any debt. So current debt of around 1,700 crores will come down. Okay. So with these few changes in the business, we are positive on the stock. Okay. And like valuation, they mentioned, like if you look at in a singular manner, it's trading at around 35 times FY18 earnings. But if you look at the other peers in the segment like ABF for all and things, they are trading at a EV to sales kind of multiples. So compared to them, we feel Raymond is a little bit cheap. Like other two guys mentioned, there is some concerns on the promoter, but in spite of that, the stock has rallied in the last 1 year. So I think the market is looking at the business more than the management.
And if this land deal happens, that would be an additional re-rating factor, or you've considered land as far as your bullish view on Raymond?
No, we haven't considered the land, because the land talks are been in the market for the last 5 years, but nothing has been fructified so far. So we just look at their textiles and branded apparels as of now.
Okay, so that's the view that's coming in on Raymond at this point of time. Two of our guests are negative on the counter, while Senthil is positive on the counter. Before we wrap up on the show, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, Chokkalingam, Sharmila and Senthil, thank you so much for joining me on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.